We are live, and we are going to be talking about some trouble with some of the crypto treasury firms or the digital asset treasuries. Reason being is remember earlier in the year when a lot of companies were just buying up crypto and buying and buying and buying and buying. Well, apparently there's a little bit of trouble in paradise, according to Tom Lee. So we're going to talk about it. We're also going to take a look at, some good fundamental news long term, but we're also going to take a look at the markets and what to expect, because again, Bitcoin could potentially drop below $100,000. And I think that would cause a lot of fear in the market, unfortunately. But the good thing is that those of us that have been here long enough understand that this is potentially an opportunity to buy at lower levels. Those of us that have a long-term trading strategy, those of us that are experienced traders, we understand the risk. So we can essentially figure that out. Now, with that being said, let's go ahead and give a shout out to the channel members. I know times are a little bit rough. It's been hard. It's been pretty hard here. But good morning to Mr. R, to Mr. Dale, to Mr. John Legend, to Mr. Lawrence. Thank you so much for showing up every day. To Guzman. And where's John Germain? Where's John Germain? Well, this is just what happened with my hair this morning, and I have such a big forehead that it's just I had to use a different shampoo. I don't know why I thought it was a good idea to use a different shampoo, but I did, and I don't like it. And I have an event tonight, and I also forgot to do my makeup the right way. So today's just a mess, but that's okay. It's better. It's better. Shout out to the VV Zombie, and shout out to Scotland. Shout out to Scotland. But let's go ahead and get into it because there's a lot happening. So CoAI is like one of the hotter projects that came out. Everybody's trading that. So which is why it's up a little bit. We've got, I want to say this is Tether's Gold right over here. PaxG, which we've got a story about Pax. But everything else is down for the most part. But let's go ahead and see what's going on here with this clip from Tom Lee, or the story. So BitMine chair Tom Lee says the bubble has burst in digital asset treasury companies. So I'm going to read to you some of our notes. I'm going to give you my opinion. Because again, one of the concerns I had with and shout out to Chipper. One of the concerns I've had with the digital asset treasuries is that a lot of these companies, because this is the thing, Michael Saylor's MicroStrategy, now Strategy, was kind of failing, and then they pivoted to Bitcoin, which was good because they got in a lot earlier than most people. They knew how to manage things properly. Some people would, not necessarily agree with that or not. That's not my business. I personally don't care how they do their stuff. I'm not invested in their stock or whatnot. But they've been able to turn their business around. So other companies are kind of hopping on the bandwagon, especially tech companies, because tech and crypto goes hand in hand, especially AI companies, those types of things. But my issue with those is that we cover them, we talk about it, we do all of those things. But really at the end of the day, we're talking about people coming from a brand new industry, from a Web 2 industry into crypto. Crypto does not operate like traditional finance. It does not operate like stocks. And I have a bunch of people that are in my shout out to Lawrence for the $10 super chat. The O Show is the sole reason why I got a 98-inch TV last week. Oh my God, that's so big. I hope you enjoy it though. But they're hopping into crypto because they want to make a profit, but they don't understand our market cycles. They don't understand the volatility, and they don't really understand a lot of aspects about investing in crypto. So I'm getting a lot of people in my comments. They're like, Wendy, well, because I've made a post about Ripple, and because they just keep doing really cool stuff as far as acquisitions and really prepping for the future. And they're like, well, price doesn't reflect that. Well, yeah, I know price doesn't reflect it, because if you look at the entire crypto market cap, or just crypto in general, stocks will get a little bit of a move up when there's bullish news, regardless of what type of market it is. But in crypto, you generally need like a full-blown bull market in most cases to see something significant. And I do believe we are in somewhat of a super cycle. It's not like cycles we've seen before. And when I say super cycle, just because I'm saying super cycle doesn't mean altcoin season, because that's completely different. But with Bitcoin, and even though we might drop below $100,000 Bitcoin, I still think that I still think that number's going to kind of go back up. I don't think we're done yet. But moral of the story is crypto moves differently, and you have to have a strategy when we're talking about crypto, regardless if you're a DAT. Good morning, gorgeous bestie Oaks, and shout out to Brazil. I have that TikTok song stuck in my head, the Brazil one, the terrible one. But you have to be able to have a strategy. Because with stocks, you necessarily don't, just because we're taught, you get a 401k, you put money in every week, and, you cash that out when you're like 65 years old and all as well. Crypto's different. We don't work that way. These are, I don't want to say they're kind of like penny stocks, but they're really, there's a lot of risk associated. So that's why numbers not going up. The entire sentiment is down. So I wanted to say that before we went into it a little bit. Now, let's get into this. So Tom Lee, the chairman of BitMine, not to be confused with Tommy Lee, the drummer of Motley Crue, said the bubbles in DATs, digital asset treasuries, may have already burst. He didn't say they burst. He said they might have. He noted that many DATs are trading below their net asset value. So he's talking about the stocks that are affiliated with these digital asset treasury companies. Because a lot of these companies, what they did is they added crypto to their treasuries or their balance sheets or whatever it is. And then they like rebranded with their stocks. They did a lot of different things. So their stock is down. And I mean, that makes sense. It makes sense. And one of the things that I've always thought about when we're talking about fundamental analysis for these treasury strategies is to find companies that are not only adding assets to their treasury strategy, but using those assets, whether it's for yield or integrating part of that into the business. And that's kind of what Vivo Power did with the, I want to say it was the XRPL ecosystem, whatnot. But essentially integrating this stuff into the system. Shout out to Arkansas and to Texas. And I feel like the companies that will sustain and do well long term have done that. You can't just put an asset into your treasury company and not expect to use the technology in most cases. Or if you're going to do that, you need to get something that is going to provide maybe returns back, like staking with the Solana and with the Ethereum. And that's what Tom Lee is doing. So he's got a little bit of a different approach, because you can't just grab something and then put it in a treasury and expect everything to be wonderful all the time. It doesn't work that way. But some people like to think that way. He also said net asset value for DATs is the total value of the crypto holdings minus liabilities. Well, that's what mixing put for me. Lee says this indicates growing investor skepticism, and I don't blame them. I'm skeptic too. That's why I don't really mess with this stuff. I don't think it's bad, but I just don't mess with a lot of it. I want to actually see these being integrated into the company to day-to-day uses. He acknowledged that not all DATs will succeed, especially those holding less mainstream crypto assets. Yes, there's once a button and its name was like, so make sure to smash the like and share this, guys. That helps me. Tom Lee also believes that the Ethereum is the blockchain of Wall Street, especially for tokenization and stablecoin uses. We'll come back to that in a second. He believes BitMine offers, shout out to Atlanta. He believes BitMine offers investors advantages like staking rewards, index exclusion, and positioning as a proxy institutional exposure to Ethereum. So he's talking about that regarding Ethereum, which we've talked about. Hey, it's Wall Street's chosen one. Now, this story over here, this is from the Ethereum Foundation. And they stated, new data confirms Ethereum is the number one ecosystem for new developers in 2025. And I believe that this is true. They also said that Ethereum attracts the largest share of first-time Web3 builders, which is true. It remains the largest developer ecosystem in any chain. And this is great news for Solana. Oh, there he is. There's Mr. John Germain. This is great news for Solana. Shout out to Chicago. I need to go back and get some pizza. Now, why is this good news for Solana? Well, because Solana and Ethereum are competitors. And this is why I hold both, but the Solana folks can directly compete against Ethereum, because let's face it, Ethereum is great until we have a lot of volatility, until we have a massive $20 billion liquidation, until you're trying to use Ethereum on a DEX, until all of those things. Because during the great liquidation, the $20 billion crypto liquidation, you were still able to use DEXs, but Ethereum faced a lot of problems. A lot of problems, which wasn't great for people. Solana reportedly operated fine. So with that being said, Solana and Ethereum will continue to compete. Like today, I sent some transactions on Ethereum. One cost 80 cents, the other one cost $1.10, and it wasn't instant. It took quite some time to go through. It took about a minute each, which is a long time. Solana is faster than that. It's super instant. And Hedera is super fast too, because they got the bundle transactions, which, by the way, I've got a video coming out for you guys with Mr. Greg Bell on Friday. So check that out. But as far as Ethereum is the easiest to build on top of, because it is one of the oldest, one of the most built out. But at the same time, I don't think it's always going to be Wall Street's chosen child. I think interoperability is going to play really, 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 really big in the coming years. or next cycle, or just in the next 4 or 5 years, whatever that may be. Primarily because, yes, Ethereum's easy to build on. People liked, oh my God, I want pizza so much. Ethereum's easy to build on. People like it. It's easier for, I guess, because it's been around longer, there's more trust in it when we're talking about Wall Street and traditional finance and all that type of stuff. And it might be easier for people to build on for now. And it's also rumored that BlackRock's going to be building using their own chain using Ethereum. Well, they're probably going to make their own layer 2 on Ethereum because Solana doesn't have layer 2s. So that's another thing that's exciting for companies is that they can build a layer 2 on top of Ethereum and completely own it. Because if they just use Solana, then it's somebody else's. Kind of, sort of. To an extent. Then there's decentralized aspects of all this stuff. So, now that being said, let's get into the next piece of news today, because we're talking about DATs. So Dogecoin Bitcoin treasury firm Thuzump weighs paying Doge rewards. They're a publicly traded company. I think they partnered with TikTok. They're going to be doing something with TikTok soon. I'm not streaming on TikTok. My account is absolutely blown up over there. I can't. We'll see what goes on with that. If I lose it again, we'll see. But the Trump family backed Thuzump Media, and they're considering adding Doge's rewards payment options in its mobile advertising app. It's a publicly listed digital marketing agency specializing in content creation and social media management. They recently launched a Doge and Bitcoin treasury, and the app pays users in cash for sharing promotional content about advertiser products. Doge integration could lower fees, ease cross-border payments, and improve user experience. So that makes sense that they're going to use Doge over Bitcoin because they want to hold their Bitcoin, and everybody loves Doge. People know about it. So there's that. We've got some more news. We've got like some chainlink, all kinds of stuff. Also, too, it's rumored that Eric Trump on X said that let me pull it up for you. That the Trump family made over $1 billion or close to $1 billion, made close to $1 billion from crypto. And I also commented on it a little bit more. And I said traditional finance are reporting record numbers for spot and Bitcoin, Ethereum ETFs. And most people in crypto have lost money this cycle. And the reason why I want to bring that up to you, I don't think they might use Linea CodeKeeper, but I don't think they want their own chain. You have to understand these guys that are swinging their ding dongs around. They want to have complete control. They want to have complete control. And the reason why I posted that is because, number one, the Trump family has no business. It's kind of, I mean, they're doing what other people have done before, like immersifying themselves while they're able to create laws about this stuff. So it's kind of just crazy. I think Polygon is just fine. Polymarket is built on top of them. So I think they're going to be fine. So with that being said, it's just kind of we're in a really weird place. We really, it's like, are they insider trading? Or are they not insider trading? And who's the less evil? Because under the other administration, we would have been banned. And now they're also talking about letting Sam Bankman-Fried out of jail, pardoning him. It's a lot of mess. It just goes to show you can't beat the ivory towers. You can't join them, but you can grift alongside them ethically and legally. So I just thought that that's food for thought over there. And the reason why I wanted to bring that post up is because if they did, in fact, make $1 billion, great, there's nothing we can do about it. But you want to kind of follow what they're doing, not necessarily follow in their footsteps, but pay attention to what they're doing. Pay attention to traditional finance and how they're moving, like BlackRock and all these big companies. They were unbothered by the drop that happened. Monday, the liquidation that happened on the Friday, because the Monday and Tuesday after that, I think they saw 1 billion in volume each day. Why would they pardon Sam Bankman-Fried? Because all public servants are corrupt and there's money involved and they have to, there's different types of narratives they want to spin. Just sucks. It really sucks, but it's the reality of the situation. The underdogs can win. We can win to an extent. But a lot of people just refuse to work together, which is sad. Which is why I like my socials, especially YouTube, because you guys understand that. Yeah, we're talking about grifting ethically. But anyways, let's go ahead and and get into it. And I'm not telling you to buy Pole or any of that type of stuff. I have a moon bag from a long time ago, so it should be fine. But we saw what the crypto market's kind of doing. You know, Bitcoin is trading below $111,000 support. And I wouldn't be surprised if we get some sort of swing wick low below over in this area to about $97,000, $98,000. And hopefully we bounce back up. But right now we do look like we're going to head back down to 102. Taking a look at the daily. Daily is ready to bounce or to head. We're sitting at support here at 107. Then we've got 103,000. So we kind of free falling here. Not super great. I do like to pull Bollinger Bands up to kind of see what's happening. And it looks like we may halt a little bit over here at 106. But we'll see if we sustain. As far as Ethereum is also trading below $4,000. And it does look like we're going to tap on to the lows over here, about 3,700. Solana dropping as well. We do have support here at about 178. XRP is not looking great at all. Like long term, XRP will be okay in my opinion, but right now it does not look good at all. Really doesn't look good. Doesn't look good any way, shape, or form, but that's okay. Stuff like that happens. Link is trading below. Oh, I forgot to sell my Link. Darn, I need to do it now. I forgot to do it yesterday. It was a bad day yesterday. Link doesn't look great. We've got a lot of support at about $10 here. ADA, 55 cents. HBAR, 12 cents. Not looking super great. But that's okay. We keep it going. Some Binance news. Binance completes GoPax acquisition, paving the way for South Korea comeback. It is a crypto exchange, and they've become GoPax's largest shareholder since 2023, but full acquisition has been delayed for over 2 years by authorities. So they officially completed the acquisition. So what they did was they came in and they took a crypto exchange that might have been having issues, and they're expanding their footprint in South Korea, which is good. And South Korea is kind of one of the crypto hubs of the world. Now, taking a look at Chainlink. Chainlink taps Mega ETH for first native real-time Oracle power next-gen DeFi. And when I'm talking about selling my position in Link, it's just a shorter-term trade. And I'm barely profiting anything off of it. But it is what it is. I don't want to get caught holding the bag. But again, I like to cover Chainlink because they're doing cool stuff over there. So Chainlink launches first native real-time Oracle on Mega ETH on an Ethereum layer 2. An Oracle is a tool that provides real-world data to blockchain smart contracts. That's why we like Chainlink a lot. It also delivers live market data with very low delay to smart contracts. Traditional finance loves this. DeFi loves it. Everybody loves it, and they're kind of almost cornered the market. Now, smart contracts also can pull price when needed, reducing unnecessary updates and lag time, which aims to make on-chain data updates as fast as centralized exchanges. Chainlink's Oracle supports key DeFi functions like perp contracts and real-time settlements. Centralized exchanges should use more of Link, I feel like. More of Link. We have some good news about Cardano. Well, Mr. Charles H. We're going to have a lot of fun next year. So he went ahead and he announced a really cool initiative. And that's because Wyoming is crypto friendly. But he launched the Charles H. government policy center. I can't pronounce his last name. I have a hard time. And no disrespect, I just can't do it. Center will focus on rural healthcare, agriculture, blockchain policy, and government transparency. They plan to take an active role in Wyoming's 2026 elections. And Charles has ties to Wyoming through medical clinic and a bison ranch. Bison meat is so good. Legislation priorities include legal access to stem cell therapies in state. No info was given about the center's funding or ties to Cardano affiliated entities. And that's cool. I wish we would have something like that in California. I do have some good news coming from California. So I got to give Gavin Newsom credit where it's due, even though I don't like 99.9% of he does. But I'm the type of person that will give credit where it's due. So he signed a bill to stop liquidation of state-held crypto, which is Senate Bill 822. So remember the unclaimed crypto thing that happened in California? So basically, in California, in every single state, they have unclaimed property. So if you leave your crypto, or if you leave any asset, let's say, as I've had this happen to me with PayPal for a few times, but if you leave an asset, cash, stocks, bonds, somewhere, and you don't check in between 18 to 20 months or 3 years or different. There's different time frames, but they take your money, they send it, I believe, to the treasury, and then you can go check unclaimed property. So they need to wait. And this is something that's needed for mass adoption. A lot of people are freaking out about it. So it's not that they're taking your crypto. It's just a policy that every single state has, and they work differently. But the good thing about what Newsom did that was good is it amends, by signing this, it amends California's unclaimed property law to cover digital assets, protecting unclaimed crypto assets from forced liquidation. And we've seen with all the crypto bankruptcies that with the forced liquidations and not giving in-kind redemptions, it can cause a little bit of a problem, a little bit of hurt. So for example, if let's say you buy Bitcoin for $120,000, you leave it somewhere, price dumps to $85,000, but you haven't contacted them or done anything on that particular platform, they can essentially liquidate the Bitcoin you bought at $120,000 at $85,000. You can get the cash, so you'd be losing money. But what they're doing now is they're not going to. They're not going to do that. So crypto accounts over 3 years of inactivity must be transferred to the state controller's office in their original crypto form, not liquidated. The state controller may convert unclaimed crypto to fiat only after 18 to 20 months if still unclaimed. The law allows unlicensed custodians to safeguard these assets on behalf of the state. This is all the information that's given. I imagine Coinbase will probably step in, or Kraken, which again, we got a Kraken ref link down below if you want to use it. I prefer Kraken, and we're partnered with them. Also, if you sign up, they're matching deposits up to 2%. And if you deposit $100, trade with it, whatever it is, they give you $25 in XRP if you use my link down below. But anyways, this is a good thing that he did. Everything else, but I credit where credit's due. And no one. Really quickly about Brave, because we are partnered with them, but the kind of partnership we have is just we shout each other out. But if you guys are not using Brave, you definitely should be. It's a privacy browser. They have a private search, a built-in AI assistant, and a VPN. And the really cool thing about it is they do have Cardano integration, which was a great segue from the previous story about Mr. Charles H. And you can manage your assets, execute transactions, and participate in governance in the browser without an extension, which is great because extensions can be a little bit problematic sometimes. One advantage of this is that Brave Vault users can easily take part in the midnight airdrops, which again, you need to check if you're eligible for the midnight airdrops. I posted multiple videos about that. And again, you can, if you use Brave, you can earn their native token back just by looking at privacy, respecting ads, those types of things. So pretty cool stuff. In addition to that, PayPal. There's a crazy thing that happened with PayPal yesterday and a part of stablecoins. So they became the richest company on earth with 300 trillion assets for about 20 minutes until Paxos burns the 300 trillion Pi USD in stablecoins in just minute. And this is the crazy thing about stablecoins. You can just do things. You can just do things. So what happened yesterday? At 3:12 p.m. EST, Paxos mistakenly minted excess Pi USD as part of an internal transfer. Paxos immediately identified the error and burned the excess Pi USD. This was an internal technical error. There is no security breach. Customer funds are safe. We have addressed the root cause, which is crazy. And then Zero Hedge commented and said, hey guys, so what exactly was the 300 trillion stablecoin collateralized when it was minted mistakenly or otherwise? So there's not really a lot of transparency, but Chris Barrett from Chainlink said, just use Chainlink proof of reserve, which I love, and he's right. So there's going to be a lot of effery that happens with stablecoins. And there's a mistake. Also, BlackRock introduces 40 Act 2A7 money market fund in the Genius aligned form. More stablecoin annoying stuff, but we got to cover it for you guys. So basically, the update allows the fund to serve as a stablecoin reserve asset. BSTBL is structured as a 40 Act 2A7 money market fund complying with U.S. regulations for liquidity and safety. Changes include adding overnight repurchase agreements as eligible assets. The fund now has shorter U.S. Treasury maturity durations. Trading deadline was extended to 5 p.m. ET, and the fund aims to meet growing demand for stablecoin issuers from compliant reserve management tools. Fun stuff, right, guys? Also, really quickly, SEC Chair Atkin charts pro-innovation path for crypto and tokenization regulation. And we love this for him. I like Paul Atkins. He's a cool dude. Cool dude. But in this story here, crypto, digital assets, and tokenizations are job one for the SEC, according to Atkins, who spoke at DC FinTech Week yesterday. This is good. He emphasized building a strong regulatory framework to attract innovators back to the U.S. and support future growth. He highlighted distributed ledger technology as the most exciting part of the crypto space. He's pushing for an innovation exemption to allow faster market entry for on-chain products and services. And the reason why I think this is moving along so fastly is that people like BlackRock, they want to come in. Wells Fargo, Citibank, JP Morgan, you name it, all the Van Eck, all these guys, they want to come back in. And if they want to participate in the crypto ecosystem, they need to, they need laws and regulations because they're not going to. So it's basically going to be a vertical integration of wealth, which is why it's important that you guys continue to watch this show and participate and do what you got to do. But anyways, on that note, I got to go. My thingy broke. I need a new, it broke. Anyways, you guys, I got to go. And I got some content coming for you at 2 p.m. PT. And then 6 p.m. PT, we have a short that really does a complete recap of everything. Sending y'all love and light.